On July 4th, 2025, the president signed the One Big Beautiful Bill Act, which made permanent the federal estate tax exemption at $15 million. Now, does that mean that farmers across the country can breathe a sigh of relief and say they don't have to worry about estate taxes anymore? Not at all. Watch this video to learn more. Hi, I'm Jason Wagner, the farm lawyer. Today we're talking about estate taxes, and although the federal estate tax exemption is going to be the highest it's ever been on January 1st, 2026 at $15 million, that does not mean you're out of the woods, especially if you're a Minnesota farmer. What the One Big Beautiful Act did was it made our estate tax exemption that came about in the first Trump presidency. Right now it's a $13.9 million exemption. Rather than having that cut in half, which it would have done, which it was designed to do at the time, it makes that permanent. Without this extension or without this permanency in the One Big Beautiful Bill Act, that federal estate tax exemption actually would have dropped down from, say, $13.9 million down to, say, $7 million per person. That would have been a huge rollback of the estate tax, the largest rollback that we ever would have seen, other than the 1 year that we didn't have an estate tax. So if that had occurred, it would have been pretty devastating to many farmers, because we would now be taxing $7 million of assets that are not taxed if they were, say, at a $14 million estate or more. And at a 40% rate, that tax adds up very quickly, not something that most farms would be able to sustain. So we have this relief. We have $15 million exemption starting on January 1st, 2026. And if you're married, you can share that through portability with your spouse, which means that you have a $30 million combined federal exemption for most married couples. But every week I have clients coming into my office who think they are not subject to estate tax because they know that this bill passed. They know that the federal exemption is going to be $15 million starting on January 1st, 2026. But I have to tell them, no, the state of Minnesota has its own estate tax, and the state of Minnesota has not increased its exemption in years. And there is no adjustment for inflation. It is capped, it is stuck at $3 million of exemption. And even worse, it doesn't have portability. So with the federal government, if you're married, you can share your exemption with your spouse. Makes sense, right? If you're married, you have a different rate bracket than if you're a single person for income taxes. So you should have a different rate for, if you're married, for estate taxes. But not so with Minnesota. Minnesota says you have a $3 million exemption. If you don't use it, when you die, it goes away forever. You cannot reclaim it. You cannot pass it on. You cannot share it with your spouse. And importantly, anything that you do leave to your spouse is subject to a marital deduction. So by definition, you have not used it. So clients sitting across the table from me who just told me they don't have an estate tax issue. Yes, you do. Yes, you do. Because you live in Minnesota, because you own land in Minnesota, and because you farm here, you are subject to our estate tax laws. You have a Minnesota taxable estate. And unless we do some planning to make sure that you can utilize both of those exemptions with both your spouses, you're capped at one $3 million exemption. So let's say I have a farmer come in, maybe they farmed 700-800 acres. In my part of the world, we're still seeing land selling at $10,000, $11,000 an acre. So there's $7-8 million of farmland. Maybe they've got another $1 million of grain sitting there. So now we're at 9, another $1 million of machinery and equipment. So let's say we're at a $10 million estate. That $10 million estate, if we saw a rollback of the federal exemption, could have been subject to federal estate taxes. With the new federal estate tax exemption of $15 million, that $10 million estate is completely exempt from federal estate taxes. But that $10 million estate is not exempt from Minnesota estate taxes, and in fact, is very likely to be subject to Minnesota estate taxes on everything over that $3 million. Because even if we left it to our spouse, all we're doing is passing $10 million from one person to the other. And if it's subject to a marital deduction, fine, they don't pay estate taxes, but we haven't used any of their exemption. Okay, so how do we get around that? You need to have a solid estate plan. You need to have an estate plan that has inside of it a credit shelter trust, that credit shelter trust is going to latch onto the maximum amount that it can in the year of the first spouse to death. Right now, that maximum amount is $3 million. However, remember, we have $7 or $8 million of farmland here, and Minnesota has a family farmland deduction of up to $2 million of qualifying farmland. So we'll grab onto that too. We'll pack that in. So we have our $3 million that we can pass tax-free, plus our $2 million that we can deduct and also pass tax-free, as long as it's farmland that qualifies, meaning that you've owned it for at least 3 years. It's ag homestead in the year that you die. It's farmland that your kids, your spouse, or your trust will agree to keep as farmland for at least 3 years after you die. And it's classified as Class 2A land, which is farmland. So now we've packed it in. We've got that $5 million, that 3 plus 2 in our credit shelter trust. The surviving spouse can be the trustee of the trust. The surviving spouse can be the income beneficiary of that trust. The surviving spouse can access the principal of that trust if they really need to. Of course, we really don't want them to, because that's just going to put it into their name, whereas we put it in this trust. Let's keep it in this trust. So if you don't have that built into your estate plan, you are leaving assets on the table that you have a legal right to protect from estate taxes. They give us this exemption. They say, here you go, use it. And if you don't use it, you don't get a second chance at it. So if you don't have an estate plan that takes advantage of this, well, you can forget about it. And that's why you see trusts on the plat book so often. That's why I say, if your estate planning lawyer says we're going to do this with simple wills and transfer on death deeds, they probably don't know what they're talking about. They don't know how these estate tax laws work. You need to make sure that you're working with someone that understands this. And in that way, we can take our farmer with that $10 million estate and boom, right off the bat, we've protected $5 million at the first death. We can do the exact same thing at the second death. Protect the first $3 million plus another $2 million of farmland. And in the example I gave, that lines up pretty well. But without the right planning, we would be subject to estate taxes. So, farmer, client, you walk in, you say, I'm okay. I don't have an estate tax problem because my estate's under $15 million. And then I know about this new federal estate tax law. That's just not going to be where we start the conversation. We have to think about Minnesota. Do you have more than a $3 million estate? And you know what? If you're a farmer, you do. Okay. We know that. If you want to protect that, farm succession planning, knowing who you're going to leave it to, making sure we're taking the right steps to get it to them, whether that's during life or through your estate plan, making sure we're not paying unnecessary estate taxes and we're protecting those assets from estate taxes is just as important. It's a huge piece of the farm succession journey that you need to be an active participant in. So, under the One Big Beautiful Bill Act, we have a $15 million exemption starting January 1st, 2026. If you have less than a $15 million estate, you're probably not going to have to worry about it. And, this is a good thing for you. If you have more than a $15 million estate, it's still a good time to think about, is there some lifetime gifting I want to do to get that future appreciation out of my name? Do I want to gift this into a trust that's going to protect it for multiple generations so that we're not paying estate taxes more than we need to, or we're not paying estate taxes on a future value that might be double what it is today, and the exemption might not go up with it. But if you're a Minnesota farmer, we're not looking at a $15 million exemption. We're looking at a $3 million exemption because that's where it's stuck. It's not adjusted for inflation. It's not going up anytime unless the legislature in St. Paul changes it. The One Big Beautiful Bill Act gives you a cushion. We don't have that concern that we're going to see a rollback of the federal estate tax exemption. We know that it's going to be permanent at $15 million starting on January 1st, 2026. We know that we have portability. So if you're married, you can potentially protect up to $30 million of assets. But if you're in a state like Minnesota, you need to work with an estate planning attorney that understands how estate taxes work and how we can protect your assets. So don't let the new federal estate tax law get you complacent. You still have a responsibility. We still need to take action. There's things that we can do to your advantage to protect your assets and make sure that they pass on to your farming heirs. If you like what you hear, subscribe to my channel. Check me out on Facebook and at farmlawyer.com.